Long-Term Care Seed is MRW's weekly 10-minute long-term care sales chat. We want to give you a seed you can plant with a prospect that will grow into a revenue-generating long-term care planning opportunity. Hello, my name is Tom Vassallo with MRW Financial Brokerage, and thank you for participating in this episode of Long-Term Care Seed. On this episode of Long-Term Care Seed, we're going to talk about the Long-Term Care Planning Toolkit that we have developed at MRW Financial Brokerage. You'll notice in the email that I sent out to remind everyone of Long-Term Care Seed, this attachment. With this attachment, you'll see videos, QR codes. You can either click on them or scan them with your phone to watch a brief video on each one of these tools. Let's talk about a little bit why we created this long-term care planning toolkit. I've spent over 32 years specializing in long-term care. I've gone through the traditional long-term care, rate increases on in-force business, and now 90+% of our business has shifted over to the asset-based long-term care. And why is that? Because people recognize the value in asset-based long-term care. The fact that there can never be a premium increase or a benefit decrease. The fact that it's not just use it or lose it for long-term care. That there's lifetime benefits available, and that there's plans that pay cash indemnity benefits. Some of the things we really lost in the traditional long-term care. But one of the things I noticed is there's a big education gap. Consumers aren't aware of these new products and how they work, and either are advisors. So you'll see we spent considerable time and resources to develop documents, all supported with videos, if you just click on them or scan the QR code, to help communicate this point, help get advisors up to speed, and also help bring your clients up to speed. So the backbone of our long-term care planning toolkit is my 32 years of experience in long-term care. So you can come to me with a case, tell me how they want to fund it, what their health conditions are. We can run it past underwriters. I will do all of the case design for you. But what we also offer is an assisted long-term care planning process. And if you click on those buttons in that attachment, you can download each one of these documents. By the way, they can all be branded for you with your contact information. With the assisted long-term care planning process, you're able to position me as your back office long-term care planning specialist. And I want you there in every Zoom meeting that we do. You can be with the client in person. I'll participate via Zoom, or we're all via Zoom. All of my emails have a link to my calendar, so you're able to go ahead and book the meeting with your client while you have them on the phone. Then let's discuss the client and their situation, of course, before the meeting, but you don't have to check with me ahead of time. For your first two cases, I'll be involved every step of the way, assist with the application, everything, and there's no split in commission. Think of it as field training, an investment we're making in you to bring you up to speed on long-term care. It's not rocket science when it comes down to it. There are some advisors, particularly P&C advisors or RIAs, that would rather just turn the case over to us and continue to work on a split basis. And in that case, we have two different split models. First, if you're in every meeting, every step of the way, we're going to have a much higher success rate. With that higher success rate, we can share more of the commission with you. So it'd be 70% to you, 30% to MRW. There are some advisors that just send us a name and say, this client asked about long-term care, and I will reach out to them, schedule it, do everything, keep you up to speed every step of the way. And in that case, it's a 50-50 split model. But like I said, the first two cases, think of it as field training. You're involved every step of the way. I can be your back office planning specialist, and there's no split on those first two cases. Let's talk about what is really the backbone of our long-term care planning toolkit, and that's this long-term care planning guide. This can be used to help generate interest. We have some social media ads you can use, and the call to action is to download the 2025 Tampa Bay Long-Term Care Planning Guide. We custom brand it with your contact information in whatever area you're in. It can be used to send out as a call to action to your existing client list. It's also a great tool that I recommend anytime someone asks about long-term care. This is the first thing you send to them. It has 18 different integrated videos, all 1 to 3 minutes long, and it really positions your client well prior to your first meeting to establish the need for a long-term care plan and bring up the concept of asset-based long-term care planning. There's also a questionnaire in there that asks health information. We do have policies that are guaranteed issue up to age 80. But they don't provide nearly as much leverage for a fully underwritten plan. And we don't want to start with the fully underwritten plan if we have to pivot to that guaranteed issue plan. It doesn't look as attractive. Whereas we start with the guaranteed issue plan, it looks very attractive, if that makes sense. The next tool I'd like to talk about is a one-page flyer we have on the Pension Protection Act. This is for clients that you know have a non-qualified annuity. Let's assume they have a non-qualified annuity. They originally put $100,000 in. It's grown to $200,000. Of course, the first $100,000, because of the last in, first out, or LIFO taxation, the first $100,000 they take out is taxable to them. Many clients never plan on withdrawing that money because of the tax consequences. Maybe they'll do it in case of an emergency. Otherwise, they're going to pass that annuity on to their beneficiaries. When they pass that annuity on to the beneficiaries, there's no step up in basis, so they're passing on that deferred tax liability as well. We can reposition that $200,000 into a long-term care plan. We can cover both husband and wife, even if they aren't both on the existing annuity. It can immediately convert that $200,000 into tax-free long-term care benefits of $400,000, $600,000, or even a lifetime long-term care benefit. What it actually does on the taxation is it flips it to first in, first out. The best way to remember this is it's there to benefit your clients and not their beneficiaries. So the first $100,000 that comes out for long-term care, thanks to the Pension Protection Act, is considered a tax-free return of principal. The next $100,000 that comes out that are gains also comes out tax-free, and once they exhaust their existing annuity, in this example, the additional $400,000 comes out income tax-free. So it's great to take what's really become a dormant asset because of the tax consequences of accessing it and position it well for long-term care. And why would you want to liquidate other assets for long-term care that have a more favorable beneficiary value and maybe receive a free step-up in basis upon your death and preserve an asset that would pass on a deferred tax liability to your children? It is the only way to potentially avoid the income taxes in that non-qualified annuity. So the next tool I'd like to talk about is a one-page flyer we've developed on the consequences of self-funding long-term care. Again, it can be branded for you. You click on the video to watch a description, and you can click on the button to download a copy of the flyer. This is for those clients, those high net worth clients that feel that they can self-fund long-term care. And what they need to understand is long-term care is not an asset problem. It's a cash flow problem. And this discusses 6 consequences of self-funding long-term care. There are some states that are talking about imposing taxes, like the state of Washington, an additional income tax for people that don't own long-term care insurance. There's, of course, tax exposure risk, a loss of step-up in basis on assets, on capitally appreciated assets they have to liquidate for long-term care. There's sequence of return risk. We can't control when we're going to increase that cash flow demand. They're also losing the chance to leverage business income. We can structure these policies so about 80% of the premium is tax deductible to them in a pass-through entity in their business. And they may be using trust assets inefficiently. The next one-page flyer I want to share with you is long-term care and pass-through business entities. Are you aware that S corporations, sole proprietorships, LLCs, they can deduct a portion of their long-term care? And with these plans, it's not necessarily about what the cost of care is here in Tampa. We can deduct, if we're 61 years old, we can deduct $4,710 each per person. That was the 2024 limit. So in excess of $9,000 a year. Let's design a plan. Let's see how much we can get where we can get that $9,000 a year tax deduction. And unlike disability insurance, even though we're deducting the premiums, the benefits remain tax-free, both the death benefit and the long-term care benefit. And the final long-term care planning tool that I'd like to share with you is C corporations. If you have someone that owns a C corporation, those annual caps do not apply. We had a case with a gentleman, his 3 children worked in the C corporation. We can discriminate on who we provide this to. He did a single premium deposit for each one of his children of $200,000, so a total of $600,000 in premium. This particular case design, that $600,000 was completely liquid after the 5th year. And of the $600,000, they got a $500,000 tax deduction in the year they made those premium deposits. So as you can see, we've developed several tools. All of these can be branded for you. We have different emails to help you get this out to your clients or prospect, different social media ads we can share with you that are working. Just give me a call at 813-875-6331. or email me, tom@mrwfinancial.com. Thank you and have a great day. Long-Term Care Seed is MRW's weekly 10-minute long-term care sales chat. We want to give you a seed you can plant with a prospect that will grow into a revenue-generating long-term care planning opportunity.